Hey folks, David Frost, LazyGapTrader.com. In this video, we're going to be talking about gap trading. Gap trading, in my opinion, is by far the single best day trading strategy available in the markets today. What I do is I teach traders two very specific methodologies within the gap trading strategy. One is the morning gap trades, and the second are gap fill trades. In this video, we're going to take a look at four specific morning gap trades from Wednesday, August 17th, 2016. Before we do that, let me just tell you the way this works. The way this works for me and the way this works for my traders. I've created a course centered around those two specific gap trading strategies, which are the morning gap trades and gap fill trades. You can view information about the course at LazyGapTrader.com. The second thing I do is I give traders the opportunity to get my gap trades each and every day, my morning gap trades sent to them by email each and every day. That's a separate service from the course. It's $77 a month, and I offer a 2-week free trial. And we're going to take a look at the four gap trades that were provided to members in an email at 9 a.m. That's a half an hour Eastern Standard Time before the market even opens. We're going to take a look at the four trades, and then we're going to take a look at the four charts and see exactly what happened as a result of those trades. So here's the email that went out to subscribers. In this particular day, there were four potential gap trades that I identified, and therefore this goes out to my members, my subscribers at 9 a.m. Eastern Standard Time. Kree, Lowe's, Target, and Urban Outfitters. And what you'll notice is I provide the specific information about the trade. Kree, I specify it's a gap lower. Support levels are 23.52 and 22.72. And then I cite the stop and profit target of about 20 to 25 cents. Lowe's, 75.62 is the support level, 73.14 and 70.65. This was another gap lower. These are stocks that are gapping down or up at the open as a result of earnings or some other news event, and it creates an opportunity. Target Corp, gap lower, support levels are $70.10 and 68.54, and Urban Outfitters is a gap higher, and I say resistance level is 36.56 and another one of $40.25. So the first one we're going to look at is Lowe's Corp, or Lowe's Company. So Lowe's didn't hit its level, but there's a lesson learned with every trade, or there's something to be gained from every trade, whether it actually happens, it works out in your favor, or it doesn't. You can take something away from every single trade. So with this one, what we're going to do is we're going to take away the fact that while Lowe's didn't hit its level, therefore it was a no trade. We didn't take the trade because we were not filled at the price of $75.62, represented by this trend line running across the screen. However, the action of this stock on this day tells us that the methodology we use to calculate these levels that I teach in the course at LazyGapTrader.com, they do work. Sometimes stocks just don't hit their levels. You can see here, I'll just move the chart over a little bit, and you can see here that Lowe's made a low of the day at 75.81, just 21 cents above the level we specified, and that's off of a gap down where the stock closed the day before at $81 or over $81. So the point is that it shows or reinforces the fact that this methodology does work. These levels are very strong. We're looking for a price reaction in the other direction. And while we didn't get down to the level in Lowe's, you can see here that this price, or the zone where this price exists, was very important, and that just reinforces that the methodology does work. Let's take a look at another stock off that list. How about Target? So the stock closed over 75 the day before. It was gapping down as a result of earnings. The stock opened up. You can see here it opened at $70.52, proceeded right down to our level, traded around there for about 20 or 30 minutes. $70.10 was our buy level. That's the level we identified early in the morning before the market opened, where Target was likely to have a price reaction in the other direction. And you can see here just 40 minutes after entering the trade, the stock was at a high of $70.97, representing a possible gain just in a few minutes of 87 cents. And those that held on to the stock longer reaped some more benefit as the stock continued higher into the afternoon hours. In my course, I have a whole module on how we derive the most profit out of a trade. I teach a strategy where you can turn a positive trade into a risk-free trade to get as much profit as you can out of it, a risk-free, emotionless trade. Therefore, you're able to squeeze as much profit as possible to enhance your gains. So let's take a look at another one. We'll look at Urban Outfitters next. Urban Outfitters was gapping higher at the open. Therefore, we identified a resistance level represented by the trend line running across the top of the screen at $36.56. And you can see here that Urban Outfitters came into the trend line and backed off. Some folks may not have taken this trade, as I teach that at some point during the morning hours, this trade became less of a probability, although still valid, but those that were willing to take a higher risk could have taken this trade and would have reaped the benefit, making a low just a few minutes later of $36.12. That represents a pretty rapid gain of about 44 cents maximum in just a few minutes after entering the trade. Whether you took this trade or you didn't take this trade, again, a lesson learned from every trade, which is the hit of this level and the pullback from this level represents, once again, the power of these levels that I teach how to calculate in my course, where a stock is likely to have a price reaction in the other direction, and that's exactly what we saw here. Let's take a look at the fourth selection for the day, which is Kree. Now here's Kree once again with a lesson learned on a trade, which is the power of these levels. While Kree traded down and slightly through the level, making a low of $23, and that was outside of our risk tolerance, outside of our stop loss limitation, so this could have possibly been a loss for those traders that took this trade. The stock did bounce back, and it does show you the importance of these levels. Sometimes with trading, as we know, we're not going to win on 100% of the trade. This methodology produces over a 70% win rate, so you will lose about 25 to 30% of the time, but our winners represent about a 3% average gain, and our losers represent less than a 1% average gain, and that's a recipe for success in and of itself. You can see here from Kree, even though traders might have been stopped out of this trade, it still shows you the importance and the power of these levels that I help you and teach you how to identify in the course at LazyGapTrader.com. Thanks for tuning in, folks. Come over, visit LazyGapTrader, come check out the course. I'm David Frost. I want to help you with your gap trading. I want to help you with your trading. Come check it out. Come test my abilities to help you get to be a better trader. Thanks for tuning in, folks.